Win rates cannot make you money. They can't predict the future. And that's what we're going to talk about today. Today's a classic example of that. And I'll show you on the charts why it's a classic example of that. Ladies and gentlemen, fellow traders, welcome to the live show with Rob. Good to have you on board again. Hope you're all well. Hope you're all making loads of money. Bit of a tricky morning. And in fact, that's what I want to talk about today, is the whole story of why people think win rates are going to make them money when at the end of the day, they simply don't. Don't forget, trading's risky. For those of you who don't like risk, don't trade. Simple, really, something to that effect. But guys, I look at this, and this morning, I walked away from the desk, and this particular account was about $200 in profit, trades in the profit, everything going well. And I come back and one's taken out its stop loss for a positive $50, which was the Brent, and the other one's in the red, and it was way in the green when I walked away. Bit of a news item comes out, and the world changes while I'm not there, while I'm making coffee, while I'm downstairs. It's kind of strange, isn't it? But that's the trouble, and that's what I'm trying to point out to everyone is charts can't make you money. We're going to talk about that at length today. We're going to talk about win rates, why people think win rates are going to make them money as well. Because it doesn't. They never do. And then United States dollar, South African rand. You guys all know this is my favorite trade because I live here, something like that. It's just one of those trades. But no, I looked at this today. United States dollar, South African rand. In fact, I took this trade like 2 minutes ago. And what I saw here is that the structure has been broken within the range. So it's in the range, and the structure's been broken within the range. I'm trading this within the range and a break of structure to the upside. But I'm going for the whole 9 yards. I'm going for the top here. I'm going for the big one, hoping that it'll break out. But if it doesn't, there'll still be some profit to watch, as long as I don't walk away and go and make some coffee or something equally ridiculous while that's going down. But here's the big news, guys. Look at this. The US 500 breaks all the records. It's an all-time high. That's amazing, don't you think? Crazy stuff. Hello, Elaine. Happy Tuesday. How's it, Carl? Hi, Rob. No money. Yeah, it's one of those days, eh? Yeah, totally. But yes, we are going to talk about win rates, and we are going to definitely go into detail on that because it is a classic example today of why a win rate won't make you money. It's a classic example. 2 trades in a win, and then 2 trades suddenly in a loss. Okay, one did get taken out on a positive stop, and the other one is now in the red. And you look at that and think, now you understand why win rates don't make you money. Strategy is the only thing in the market that can make you a profit, because strategy will, at the end of the day, give you that opportunity to make some dosh. How's it, Shane? Hello, Henny. Good to have you guys here. And I'm really pleased the Telegram channel is doing so well. And you guys are chatting to each other, and it's fantastic. And for once, there hasn't been anyone attacking us there and doing the spammy, scammy thing just yet. Well, I've had 1 or 2 people contact me, but that's okay. I'll get rid of those. But I did find something strange on YouTube, which you guys need to watch out for. Wow, I was quite surprised. There was a guy or a woman or someone who commented on one of my videos, quite happily commented, WhatsApp me on this number, and all kinds of smiley faces and hands and goodness knows what else. I never put those in my comments like that, with all the lines and lines of them. And I looked, and his channel name is now something Rob's Trading or something, and he's got my photograph. Brilliant, isn't it? So you guys think it's me, and then you go and WhatsApp, and then he sells you something insanely ridiculous. So yeah, just keep an eye out. Make sure the channel name is Rob Gill Trading 8. That's my channel name. And yeah, generally in the comments, generally I don't really ask you to WhatsApp me or contact me to buy something or anything like that. So it's you just look out for those red flags. They're a bit weird. Okay. Normally, if I direct you guys to anything in my stuff, it'll normally be from the video, word of mouth to you. Hey, go check out the link in the description, so to speak. And if there's anything, the link will be in the description. It won't be in a comment really, except for the one I put out there is the free Forex book. That's the only one I put out there. I always leave a comment at the top for you guys to get your free Forex book if you want it. I'll actually change that one day to something else, but I'll put it there for you guys so you can have a read through it and whatnot. It's there. Yeah, no, that's a bit of a strange one. I actually had quite a laugh at that. I'm just waiting for everyone to get here so that I can go through the training part of the video, so I can go through the story that I want to tell today, because it's important. And I see it quite often. You know, I had another comment where the guy said, this is nothing new. I've seen all this before. There's nothing great about this. This is all over. I'm actually quite surprised by that, because I must say, guys, for those who do that, for those who think that way, I've seen this all before, it's all the same. Why are you watching YouTube videos to look for a shiny new tool when you know it's always going to be the same? The market's not going to change because you've come into the market and you're looking for a shiny new tool. At the end of the day, for those who think or are expecting something completely new when they watch a YouTuber or a course or anything that's on about stock market trading, you're expecting something different. Why would we do something different? You know, since the dawn of time, mechanics and electricians and whatnot have worked with the same methodology. All that they've actually done is improved the way they do it. Maybe improved their tools or whatever the case. And the same goes for trading. Trading, the same methodology has applied since the dawn of time. Buy low, sell high, you know, nothing serious about that. And all we've done is applied a few tools along the way and applied a few extras along the way. But nothing's changed. The methodology is the same. Nothing's ever going to change. And all I'm showing you, the guys, is that you need a strategy. You can't rely on the charts, which most people do. Most people rely on the charts. So it's quite interesting to see that people are thinking, but it's all the same. It's not all the same. Well, it is, but it's not, because I'm applying a methodology that other people don't apply. Well, there are one or two that do, but not many. And a lot of people don't know about that methodology. But even if it is all the same, you're looking for a shiny new tool that you're never going to find. You're never going to find, because they're all the same. They've been the same for a long time. You can't change the market. You can't change the way the market works. The market just works that way. And, you know, you just have to figure out how it works. That's what you're looking for. That's what you're actually, that's the golden nugget that you're actually digging around for. What you're digging around for is that golden nugget on how to do it, how to figure the market out, how to trade the market. Those are the real golden nuggets you're looking for. You're not looking for a nugget that says, this is a brand new system. This is how we now trade the stock market. There's no such thing. It doesn't exist. It's actually amazing to hear someone think that they're looking for something like that. It isn't there. It doesn't exist. It will never exist. The markets will always be the markets. It's a buy and sell, and that's it. It's not going to change. And all I'm doing is giving people the strategy. So yeah, so for people who think that way, you're in trouble if you're in the market, because you're going to lose a lot of money, because you're thinking that it's all this, that every time I watch a video, that's the same, I've seen all that before. And you're trading and you're looking for a new tool. And normally when you're looking for that, you're looking for something to change what's going wrong in your trading. Now, when you're with me, I'm basically reiterating, giving you the advice that you need, or the information that you need, so that you can work out your trading system, and you can improve on your trading system, and you can work with your trading system. But it's not going to change it. It's not going to change the world. It's going to help you get along in your trading. So yeah, I find it quite amazing when people think they're going to get a brand new shiny new tool. Yeah, they're not going to. It's unfortunate. Don't search for that. There isn't a fancy shiny new tool. Gold is going down. This one is going down. I said it was going down yesterday, and there she goes. Off she goes. I think she's broken structure now, and she's heading on down to the bottom. This is a result of, like I said, when people got into this, it was the institutions buying in because they were thinking there's a bit of shakiness in the indexes, and there's a bit of shakiness in the politics and things going on. So the safe haven was to go for the commodities, to put the money in the commodities and to keep the money safe here. That with the Dixie going down, that causes a commodity super cycle. Maybe they were expecting that as well. Now that that's all gone away and blown over the mountain, they're thinking, oh, wait a minute, it's better to have the money back where it should be in the shares, indexes, things like that, because that's where the profit is. The profit's not in the commodities. This is safe haven. So they take all the money out again and they put it all back. And when that happens, then this happens and you get this crash to the downside. So gold and palladium and all of them, copper, the whole 9 yards should all start becoming pretty bearish. And that's just the way of the world. This United States dollar, Japanese yen, I didn't take it on this platform, but I do have it on my other one. Nice trade, going to the downside. I think I called it yesterday for you guys. I don't know if I told you on the Telegram or where else, but yeah, it was going down, so I decided that that's a good short trade. So that works out as a great short trade. Okay, so we've got Shane, we've got Fani, couple of the protagonists, S&P US partner of NVIDIA, SGP US partner of NVIDIA. Hi Shane, Carl, hi. You know, at the end of the day, I own NVIDIA as an investment, and that's one of the best. It's like fantastic. It just keeps on going up. It's brilliant. Love that one to bits. Great British pound, euro. This was way up this morning, and now it's fallen back down to the support. Ooh, well, you know, these things happen. You have to deal with it, but that's why we have a strategy. So I'm going to talk to you guys about that. It just went short on gold. Probably it will now reverse. Actually, you know what? I don't think so. Do you know what, Bonnie? I'm going to go short with you on gold. Come on, let's do it. Gold. What's your stop loss, Bonnie? What's the stop loss? What shall we put it at? Well, it's going to have to be quite far away because, I mean, it has to go back up to, the stop loss can be, we'll put it at 4,000 and, I'll put it at 4,050. That's quite far away, Let me just see how that's going to work out. And let's see if it will give me that. Okay, it's going to have to be 0.3 lots or 0.02 lots. I'm just working out the size of the trade here. Okay, you know what I'm going to do? I'm going to make this 4,025, get it down to a more reasonable level. And then I'm going to go here to the take profit, and we're going to put it down at 3,500. And we're going to sell it. Okay. Gold sold. Okay, so we're in a gold sell trade. There you go. Gold sell trade. Now I'm in with you there, Fani. We're in the short together. How's that? There you go. Stop loss 4025, and you know what? I put my stop loss at exactly the same place you did, 4025. There you go, fantastic. Stop loss is in. Take profit. Your take profit's probably not as ambitious as mine, but it doesn't matter. I'll put the take profit in, and I think what we'll do is we'll just draw this little green thing down to the profit. We can see how far away it is, and then we'll take this and just put it at the stop loss, which is 4025. What have I done here? Oh yeah, this needs to, okay, sorry. Gonna mess me around till I'm blue in the face, isn't it? I'll tell you what, let me delete that one, put another one in. There we go. Put one of those in just for fun. So just so you can see what the trade's doing. Of course I get it the wrong way around, don't I? Don't want to put that in. That's my third try. Third try. There you go. Now I've got it. Yeah, that looks like pretty decent. There you go. Nice. Now you can actually watch where your price is and what's going on. Absolutely fantastic. So let me get to training. I think I've got to start the training, because the people are turning up. Everybody's here. Partners in crime, Barney. There we go. That's it. Let's do this. Let's make some dosh. But it has been quite a turnaround day. So I'm going to talk about the win rates. I'm going to talk about why most traders lose money because they believe in a win rate. Why win rates don't work. Win rates are the bane of your existence. And like I've said, today is A prime example of why win rates don't work. This particular account, when I got up this morning and I had a look at the account, $200 in profit, $202 in profit, because it's a $25,000 account. And I'm looking at it and I'm thinking, well, that's pretty good. My other accounts, huge profits, doing well, doing great. And I look at this account and I think, well, that's fine. I go downstairs and I'm having coffee and breakfast, messing around, doing my thing, leaving things to their own. And I come back and the Brent crude oil is taken out at stop loss in a profit because I put it in a $56 profit. So it took it out. And that got taken out almost just straightforward, gone. Poof, I put it there because of these trend lines. You see that there's a trend break which it broke. So it's broken that trend to the downside. So I put the stop loss there, went $56 in profit, just in case it broke, and it did. So we didn't lose anything, but still we're out of the trade. And I come back, this trade was $100 and something in profit, and look at that, it went down, and now it's in the red. And that's why you can't rely on a win rate. That's why you can't rely on the charts. You can't rely on the charts to make your money for you. These are two new trades, so we're not going to talk about these two new trades. We're talking about the other older trades. The thing is, what do people do is they go on a course and they get onto this course, and the course tells them you need to win more trades than you lose to make money. And that makes perfect sense. It totally makes perfect sense when you think about it. You think, well, if I win more trades than I'll lose, then surely I should be in profit, shouldn't I? I mean, wouldn't you would think that way? But here's the problem, and here's the crux of the matter. When you win, it depends how much you win. And when you lose, it depends how much you lose. So you're thinking, no matter what happens, if I win more than I lose, I should be winning. And that's what you go away with from the course. That's what you go away with from the information that you've got from the guy driving the Lamborghinis and Ferraris, that you just need to win more trades than you lose. But did you know that you could win 9 trades out of 10 and still be a losing trader? You know how many traders are losing traders because they believe in win rates, because they believe that they're going to win because they win more trades than they lose. I've had so many people tell me, that's rubbish. I've got a 70% win rate. I never have less than 50%. How do you get that 70% win rate? Well, the start is this. We just took a gold trade right now, Fani and myself, and we look at the gold trade and we say, first thing we do is we look at where do we want our stop loss on the chart. Because that's the strategy. We don't make money on the charts, we make money on the strategy. So what do we want to do? We want to make more money on the win than we lose on the loss. So what are we doing? We look at this and we say, we're going to put our stop loss there at 4,200. So now we've decided on a plan and a strategy. And this is the crux of the matter now. Now we look at how much we can win. We want to make more on the win. And this is the whole point. Now, you look at that and you think, I'll put my take profit down there. Now, some of you might have gone, I'll put my profit over there. They say, I'll be more cautious about this. Almost a 1-to-1. I'll put my take profit at 37. Some of you might even put it at 37.50, 1-to-1. And that's fine. There's nothing wrong with that. But the whole point of this is, if you do this, and you do this properly with a view to making more on your wins and losing less on your losses, and you target your trade like this, how many times is this trade going to reach target? And how many times is it going to take a loss? Now, logic tells you because the loss is much smaller and the target is much wider, the probability is you're probably going to hit the loss more often than you're going to hit the target. It just is that way. Now, the reason I call it 50-50 is because when you do have a system on charts in the market that you're using, so you've got this system and you're using this system and this system works for you, you've normally got the edge of taking the trade the right way when you take the trade. So you've got the edge. You're looking at this and you're saying, that's broken through there, it's broken through the support level, big red candle heading down, I'll take that trade because Fani took that trade. And then you look at it and it goes into the red like this. It's losing $26. Like, oh, I took the wrong trade. No, you didn't. Every single trade you take can go either way. It's 50-50. The point being, the likelihood that it could go back and take out my little stop loss is pretty high. The likelihood that it could go down and take out my gargantuan profit is pretty far away. And that's why you won't have a positive win rate with the system and a strategy that we are using. The system and the strategy that we are using is made to make money, to make profit. And as I've told you guys before, most of my profit is made on 1 or 2 trades in the year where I get a gargantuan win. And the rest are made with trades that have made target, trades that get down and they take these targets out, because those are excellent. That's a pretty good win to loss ratio. And then there's a whole bunch of trades which take out the stop loss for the full stop loss. And there's a whole bunch of trades, like with the Brent crude oil, that take out my stop loss, in fact, in a profit. This was a $56 profit stop loss. Now, that's because I manage my trade and I move my stop losses up when I'm in profit, when I'm in a decent profit. It's a coin flip. If you flip a coin 10 times and you land on tails 5 times, you land on heads 5 times, if I give you 2 for every heads, there isn't a person on the planet that wouldn't choose heads, because it's in your favor. The whole plan is in your favor. Win rates can't make you money because the people who work on win rates are generally scalpers who don't have a proper stop loss, who don't have a proper target, who don't have a proper plan. So in other words, I take a trade like this gold trade, I jump in with Fani and I say, I'm going short on that, and I jump in and I don't know where my stop loss is going to be. I just put my stop loss as close as possible and I put my target somewhere over here, and then it goes $10 into profit and I go, I'll take that, click, and I'm out. And I take the next one and the next one. It's basically a form of scalping, and you're making less on your wins than you're losing on your losses. Because what normally happens is when someone like that goes into a loss, they can't have a loss because they have a win rate that they worry about. They have to boast about their win rate. Their win rate's kind of more important to them than the actual money. So I'm in a loss. I can't show a loss. Somebody's watching me lose. I mean, somebody might see that. And if somebody sees it, how am I going to explain that? How am I going to explain that I've taken a loss? So I don't want to lose. So what do I do when I'm in a loss? This goes into a gargantuan loss, and then I move the stop loss away. Firstly, that's the first thing you do. Now, I had a stop loss, but then I moved it away. That's the biggest mistake yet, because every stop loss that you take should be in an area where you think the trade's probably invalid if it gets there. The next thing I do is I do the old dollar cost average, because I think if I double up on that trade and I half the value of it, then if it gets back to my cost, then I'm going to get all my money back. That's the plan. So we do that. But then it keeps on getting worse. It keeps on going up. It keeps on going up. It keeps on going up. Let's say it's this, and it just keeps on going, keeps on going, keeps on going, keeps on going. And it goes all the way up to here in the dollar cost average again, because what goes up must come down, in your opinion. So you think, it'll cycle, it'll come back. It always comes back, doesn't it? That's another point that I have to make. It never does. And then it gets up to here, and eventually you can't take it anymore. You're in so much debt. You've lost so much money. You're just like, I'm going to get out of this trade. I'm going to get out of this trade right now. I can't take this anymore. And then what happens? It's all the way back. Comes all the way back. And you think, oh, the market's got a conspiracy against me. They're watching my trades. They know what I'm doing. Well, that's what I always hear. That's why win rates will not make you money. Win rates will not make you profitable. There isn't such a thing in the market as a win rate that's going to make you profitable. It's always, always, always going to fail, because you'll always get caught up. And the only way you can have a win rate, and a decent win rate, is by not having a proper plan. if there's someone out there that's got a win rate reaching the full targets every single time, and a decent target, not a Mickey Mouse target of $10, making more money on their wins than they're risking on their losses every single time, then they're probably a really good trader. Did you know that any trader who's winning 60% of the trades that are done properly, trades that are done really properly, is probably one of the top traders in the world? That is something that you should understand about win rates. A trader who's winning 60% of their trades, where the trades are done properly, where the targets are met properly, where the stop losses are put in place properly, that trader is probably one of the top traders in the world. Now that is something for a beginner to look at and think, why do I think I'm going to get into trading and just make gargantuan sums of money out of nothing, out of fresh air, and become some kind of special trader? So that's a little bit about win rates. I hope you understand a little bit more about how win rates will not make you money. Charts cannot predict the future. You and I can't predict the future. All we can do is put a strategy in place and hope that it goes in our favor and that we'll make more on our wins and lose less on our losses in the long run over time. Ha! That's my rant for today. There we go. I hope you guys enjoyed that. So I do that. I'm going to do that every week. Just a little bit about the markets, a little bit about the charting. And, you know, a lot of people think that it's all about charts, but it's actually not all about charts. I called this one today, and unfortunately, this one has kind of gone against us. But I said wait for the red candle to close. That candle actually turned green and went up. And now it's broken to the upside. So this trade now becomes a long trade, actually, not a short trade. So this has turned around and gone the other way. This one seems to be faltering for whatever shape or form. But that's clearly why we have a strategy in place. And the strategy is in place because we understand that. There are many times that you're going to sit in drawdown for long periods of time before you actually make a profit. And the bigger the amount, the more stressful it becomes. So, for example, I've explained to you guys on more than one occasion that you need large sums of capital to trade to make those large sums of money. So there's a lot of traders out there that will say to you, I made $150,000 today, or I made $200,000 today, or I lost $50,000 today. But that's because they've got a huge account that goes with that. There's a huge account that goes with that win or loss to make that. You can't do that with $1,000. You can't do that with $10,000. You're going to need to have maybe a $500,000 account or $1 million account to make those kinds of wins and losses. So don't think when you hear those big headlines, I won $150,000 trading today, or I lost $150,000 trading today, that somehow that started with $1,000. No, it didn't. It most certainly didn't. That trade started with like $500,000 to get there in the first place. And then a lot of those traders are also able to navigate the length of the trade. In other words, to sit in the drawdown for a longer period of time. Have a wider stop loss, sit in the trade, watch the red for 3 months, and then finally get back and cycle out and make the profit. And that was another point that was made is, for example, someone said that I don't need a stop loss because the market goes up and it'll always cycle back and I'll always get the money back. Now, in Forex, that does often work. In indexes, not so much. And in commodities, not so much, although commodities are cyclical. But Forex is probably the most cyclical trade you can take. It will go up and down, up and down, up and down over a period of time. The trouble is, how long can you wait? For example, the euro-US dollar, as I mentioned in my last videos, has done that on numerous occasions. And okay, this is the euro Great British pound, but this has also done it before, where you have these gargantuan moves. So, for example, you take a long trade at 130 on the euro, and now it's sitting at 116, and it's been there for a long time, maybe 2 years. So, yes, it'll cycle back one day, and it'll get to the 130 one day because it's Forex. It goes up and down. But that thing's been all the way down at 1-to-1. Are you able to hold on to that trade and pay the fees on leverage trading, because it's Forex, pay the fees on a daily basis for 2 years or whatever, how long it takes before it gets back to said cost? So in the long run, it's probably cheaper to take the stop loss, move on to the next trade, and keep on going. That's why it doesn't make sense when people say that. So that won't work either. That really doesn't work. I'm holding on to my trade forever because it will eventually cycle around. And what if it doesn't? And as I said to you earlier, one of the big issues you find with traders is how long can you maintain? How much money do you actually have? How much psychology do you have or fear do you have? Can you hold on to a trade when it's $200,000 in loss? And you're like, it'll come back, it'll come back, it'll come back. And you get to that point where I can't hold on to this any longer. This has got to go. And the minute you let it go, you know what happens. It's going to come crashing back down and land in your lap. And you'll be like, oh, I could have stayed in that trade and I would have got all the money back, which I've been hoping for the last year. And now suddenly I get out of the trade and within a month it goes back to where it should have been, or within a day sometimes. And that's probably one of the worst feelings you'll ever experience. So don't let it get there. Don't let it get there. Keep the losses small. Keep the losses as tiny as you possibly can and get out of them as fast as you possibly can. And your world will be that much better and that much more relaxed. That much I can tell you right now. You'll be that much better off. Hello, Nick. Hello, Blue Mango. Good to see you. Yeah, the safest stop's an option, but it's the most expensive. The thing is, like, for example, with contracts, with anything, you're good with futures in the sense that if you monitor the stop losses, you watch the stop losses, you should be okay. With spot trading, if you're trading 1-to-1, in other words, you're not leverage trading, it's investing more than anything else, then you don't need a stop loss. That's a completely different ballgame because it's 1-to-1 money. And if you're just trading, for example, let's say you're buying shares. That's why I set and forget shares. If you're buying shares, they'll always come back to the price. They'll always work their way back up unless the company's going bankrupt. So in that scenario, a stop loss is more relaxed. It's a more relaxed thing. And it's a more like, for example, if I have an investment, my stop loss on an investment is basically, if I see that the company's in trouble, then it looks like it's not going to work out, then I'll consider moving that money into a different investment or something to that effect. But that's not trading. That's completely different. And there I don't have a set percentage loss or anything to that effect. When it's 1-to-1 money and it's an investment and it's set and forget, that I look at as a long-term investment. So I'm looking at that to the future and I'm thinking, in 30 years, that's going to make me money. That said, I won't be here in 30 years, so, But anyway, that was what was said. Now it's probably more urgent. But anyway, if you look at how you trade 1-to-1 and how you invest 1-to-1, there you don't use the system or the strategy. There you use a completely different strategy. There I use the simplest strategy in the world. It's got one rule, set and forget. The only other rule is what rule 1B, and that is if the company is going bankrupt or crashing, then get the money out of there and put it into another share. That's about as it. That's as good as my stop loss gets. And the other thing that I have with investing is make sure that you're invested in shares that have got liquidity. In other words, you'll be able to sell them if you need to. Don't invest in penny stocks and rubbish and unknown companies and gambles and the hope that maybe one day that company will do well because it might just become a 10-bagger. That's a different kind of trading. That's penny stock trading. That's a completely different kind of trading, a completely different kind of investment. And that is very much a venture capital type thing where you see a company, it's 5 cents, and you believe, well, the strategy goes like this. If you buy 10 5-cent companies, right, the possibility of one of them being successful, there is a probability, okay? So the probability is I'm going to split a bunch of money amongst 10 5-cent companies, with one or two of them being successful, really successful, and let's say they go to $10 or $20 or whatever the case. That's going to make me a huge sum of money. And then they might start becoming liquid or whatever the case. But that's a different kind of trading and a different story for a different day. But if you're just investing normally and you're investing your money in shares, then what I always say is take your money, invest it in the shares, but invest it in blue chip shares, shares that have got liquid, shares that have got a lot of business going on, so that you can buy and sell large quantities of shares. It's important, you know, unless you're trading one share at a time, which is probably different. But you see with those illiquid shares, the swaps are huge, so the sell price and the buy price are pretty far apart, and that becomes a problem at the end of the day. If you want to move your stock, you don't want to sell it for a loss. You know, you buy it for 5 cents. And you've got to sell it for 3 cents. That's quite a big difference. It's quite a big difference on a penny stock. So rather buy things that cost $50, $100, $700, whatever the case. You'll be better off. Don't feel bad. So you don't have 1,000 shares. So you got 2 shares instead of 1,000 shares. At least you got a good company. But that's the story on investing as well. Now the reason I talk about trading is because trading is a completely different ballgame, a different monster, because it's leveraged, right? And leveraged means that you trade $10,000, you put $10,000 down to trade $100,000 or $500,000, depending how leveraged you are. Now, with leveraged trading, that's a different ballgame, because if your $100,000 trade goes down 10%, you lose all your money because you only had $10,000 to trade the 100,000. That's the difference, and that's why we teach stop loss. That's why we go on about maintaining your trade, managing your trade, having a strategy, and understanding that you can't time the market. You see, that's the issue. You can't time the market. Nobody can time the market. Everybody thinks they can, but they can't. And that's the issue. When you start thinking, but if I can't time the market, how am I going to trade? How am I going to make a profit? And that's where you know, if you're investing, that's fine. You don't need to time the market. But when you're trading, you kind of do need to time the market. You kind of do need to figure out how you're going to make money in the market. So you think, how am I going to time the market if I'm trading? Easy, not difficult at all. It's all about simply taking the market and saying, well, I can't time the market, so I'll put a strategy in place. And that way, I'll just try and make more on my wins and lose less on my losses, understanding that half the time I'm going to lose. Then suddenly you don't need to time the market anymore. You just need to manage it. That's all. That's the difference. Okay. Do you think Great British Pound JPY will fill the gap? Let's go, for example. Do you think the Great British Pound Japanese yen? Well, let's go and have a look at the Great British Pound Japanese yen, because I've got the United States dollar Japanese yen. It's also got a gap, by the way. Let's just see. See that? There's the gap, right? Now, gaps, understand the one thing about gaps, Shane, is will it fill the gap? Possibly. But, you know, the saying in the stock market, the Forex market, any market, is the gap will always be filled. Those gaps will always, always, always be filled. And they are correct. They will always be filled. The problem comes in with when. Nobody knows when, but particularly on Forex, the gap will always be filled. Now, when people say the gap will always be filled, the natural tendency is to think that the gap will probably be filled today or tomorrow or close by. But this gap could stay there for the next year before it gets filled. And that's what a lot of traders don't know. Those gaps get filled at any time in the future. So you can't trade it as a gap. But what I do tend to do psychologically is I see a gap, and if it's only just happened recently, I look at it as, you know what, psychologically, the other traders are going to try and fill that gap. They're going to try and look to fill that gap. So I'm going to play that game of, if they're going to try and fill that gap, I'm going to ride the gap with them or ride the trade with them and go to fill that gap, because they're all going to push for it. Whether it makes it or not, we don't know. But they're going to try. Look, they tried there, they failed. They're probably going to try again and fill that gap. The reason I don't have this trade on this account is I've got it on my main account as a short, because I'm looking to fill that gap. So, yeah, so I don't know. Do we have Great British Pound, Japanese Yen as well? It'll be similar, and it's exactly the same. Look at the Great British Pound, Japanese Yen, how it's filtering over and going down towards that gap. And then the US dollar, Japanese Yen, very similar trade, very much the same thing. That's probably going to try and head down and try and fill that gap. And there's another reason that it will try and fill that gap, and that is most likely because the Japanese government does not like to see their currency above 150, and they do everything in their power to force it down. But anyway, let's take a short trade on this account as well. What the hell? Might as well. We're here, aren't we? We might as well add one here as well. So if we're going to take a short trade, where was my stop loss? 153.5, I think. Yeah, is that what I had? 153. I'm just trying to think of my other trade. 153.5. Okay. That looks like a fair, decent stop loss on this account. Will be perhaps there. Okay. And then take profit definitely at 148. So we'll go with 148.82. Yeah, that's fair. And then we'll just we'll add this one into the bus. There we go. United States dollar, Japanese yen will go short. Okay. So there you go. That's now short. So we've added that into the tray here. And there you go. So now you've got 2, 3, 4 trades on here. That's okay. Yeah, no problem. Let's see if any of them will go green or something like that. Okay. Rob, look at the gold chart, October 6, 2023. There's still a gap there. Almost blew my account on that. You see, that's exactly what I'm saying, Blue Mango, is if you go back, you might find gaps that still exist, and those gaps will get filled. Okay, hopefully Shane has lost the video feed. You might have to redo it or something. I don't know if there's issues with anything. I can still see the video feed on my side. Has everybody else still got their video feed? Can they still see me? Can they still see the charts? Can they still see us? Are we still here? Okay. Let's have a look, shall we? And oh, using your phone. Yeah, okay. You know what I found on the phone is trying to, recently, I don't know if any of you guys have had this issue, trying to reply on a comment on the normal YouTube app, not on the studio, on the YouTube app. And the writing is the same color as the backing, so you can't see anything. It's like black writing on black backing. I was like, oh, great. Wonderful stuff. But at least I can still reply to the comments on the studio, and I can reply to it on PC and whatnot. But yeah, that's a bit of a weird one. I tried to figure that out, and there doesn't seem to be an answer for that. I think it might be a YouTube thing. Yeah, okay. Barney says we are live. Okay, so it's showing there must be something going on your side there. That's a bit of an awkward one. Okay. Technology. Just love technology. I actually do love technology. Let me be fair. Okay. But technology is one of my favorite things. When I started out trading and we had pens and pencils, I mean, I used to dream of having technology. I used to think, imagine if you could carry a telephone around. No, everybody's glued to their telephones now. And imagine if a telephone could have a screen that you could touch. Boom, there you got it, you know. And we grew and we grew and we grew to the point where we are now. I love technology. I just dreamed of it when I was younger. It's almost like I manifested it. And so, yeah, but now it can sometimes give you a headache. It can sometimes really mess you around and drive you insane. But that's because we got it and we're used to it and we've been playing with it for a long time. There are other issues with technology as well. There's so many people out there trying to, you know, or scam you or take your money or whatever the case. But that's why I'm very careful on the YouTube videos as well with my accounts and what have you. You know, people say, no, put your account out there, this, that, and the other. Are you nuts? Do you know how many scam phone calls I get a day trying to get into my bank account? That's insane. You got to keep these guys at bay. I'll tell you what, now you're going to put it out there in public. It's crazy, isn't it? Absolutely crazy. So I try to be very careful with that sort of stuff as well. That's the best way. The best way. You know, and how easily people get caught. I got people out there, friends out there that I know that are very savvy, very on top of things, and they get caught. So I'm like, oh, geez, if you got caught, then anyone can get caught, you know. That's kind of like how bad it is out there. Hi from Canada. How's it, JJ? Lekker, man. Good to see you. JJ, it's a name I haven't seen for a long time. I used to have a very good friend called JJ. Maybe that's why there's a low viewership here today. So, guys, I've already done the training. For those of you who got in late, for those of you who haven't seen me up till now and only jumped into the video now, if you go back to the early stages of the video, I don't know, a couple of minutes in, you'll see that I've put in there the training today on win rate and why a win rate won't make you money. So if you've missed that, go back and watch that. It's so important. And today was a classic example of why a win rate doesn't make you money. You really, really, really need to look at that. So many people are tripping over themselves, not understanding that it's not a win rate that makes you money. And I don't know if it's because the guys haven't watched the whole video. I've seen a few comments on that. And because I always put the strategy at the end, or I try to put the strategy towards the end, because that's, I guess the strategy is not the exciting part for most people. Because when you find out that the charts are not don't make you money, that's probably quite disappointing. So yeah, I don't know, but go back. If you want to see the training, go and have a look at the early stages of the video. It's all there. It's all there for you, and you can go and find out all about why win rates will not make you money at the end of the day. It's all about the strategy and the business and understanding that you need to have a plan. You need to have a set plan to make the money, and you need to use the charts to manage it. You know, was it somebody said to me the other day, you say the chart, you don't need the charts, but then you use the charts. And yeah, you don't need the charts, but you use the charts because they make you feel comfortable. They give you an opportunity to manage your trade. That's what you use them for. You use them to find an entry point that makes you comfortable, and then you manage the trade around that. If there was no entry, if you just looked at a chart and said, here's a chart, boom, there's a chart, I could take the lines up, but I'm not going to. There's a chart, what am I going to do? Should I go long or should I go, I'll go long, I'll buy. That's basically what you can do you can just buy it, manage it. It's 50-50. It could go up or it could go down. There's no clear predicting the market. You don't predict the market with charts. You never predict the market with charts. All you do is you look at possibilities, you look at probabilities, you look at what happened in the past will likely happen again in the future. That's what charts are for. Charts are for looking at what happened in the past. Might it happen again in the future? Gives you a line in the sand, gives you a place to maintain your trade, to manage your trade, to work your trade. Now you can start working your trade. Now you can start managing it. Now you take the trade, you put it in place. Now what you do is you walk away from the charts and you move to the strategy side of your business. Now you're in strategy. Now it doesn't matter what the charts do. What matters is you go into strategy. It would be nice to be able to take every single trade and see it go into green. It's making you money just like that. Wouldn't that be great? That would be fantastic if you could do that. But nobody can. Nobody can. As I said to you earlier, if there's a trader out there winning 6 out of 10 trades, probably one of the best traders around. And that doesn't mean if you're making less on your wins than you're losing on your losses, then that's not you. You're not that trader, right? Those are traders that actually trade properly, like Target. There's that type of 6 out of 10 trader, you're not going to find easy. How is Canada these days? Hopefully you guys are doing well in Canada. Hope you guys are enjoying life now and everything's just fine. Normally is. That side of the world, we live in Africa, but things are different. Slightly different. Yeah. Interesting how many people come and look for trading videos or look for information on the internet on trading, and they expect to find something completely new, expect to find something completely different, out of this world. And then they watch the video and they're like, oh, it was all the same. What are you expecting to find? It's actually quite interesting. I don't know. I think what it is the psychology of people is that you've firstly been taught that you trade on the charts. So the first thing you do is you get stuck on the chart. So you're like, I'm going to trade the charts now. So you just only trade charts. And then you find out that because the win rate's not making you money, so you figure you're losing and you're losing trades or whatever the case. And then you keep on looking for something better, looking for something better. And then you get into that, what I call the never-ending cycle of doom, where you keep on looking for the next shiny tool, the next shiny tool, the next shiny tool. Keep on looking for something better. There isn't something better. They're all the same. Every single system on charting system, not strategy, every single charting system on the market will work. They all work. That's why they're there. At the end of the day, they work. They're a charting system. And the simpler you can keep it, the better off you're going to be in the long run. Canada is a shit, but we won't get into the politics. Yeah, I often get dragged into the politics. I don't know why, but I do. Yeah, I get dragged in. I'm actually not a politics type person, but yeah, I've been dragged into it on numerous occasions, and yeah, I don't know why, but it happens to me on a regular basis. Get involved in it, start talking about it, and they're like, why am I even talking about it? I don't even like try and deal with it. I try and stay out of it as much as possible. But while we're talking about it, shall we have a look at the news and see where we are today? Let me see if I can find the news. Aha, the news. There we go. Let's see what's happening in the news today. Trump offers Japan anything you want after rare earth deal. Oh, anything I can do to help Japan, we will be there, Trump said, praising. Oh, okay, I can't even pronounce that name. Flight delays pile up as shutdown eyes longest in history. It is the longest shutdown in history, and nobody seems to care about it. Everyone's just buying stocks. Buy, buy, buy. Tesla chair pleased with investors. Ford's enormous F-150 becomes part of Japan efforts to woo Trump. Okay. Domino Pizza Enterprises shares fall after denying. China pitches itself as... You know what the problem with the shutdown is? What's the Dixie doing? You see the Dixie's going back up. Oh. The problem with the shutdown, for me, is it all looks rosy now. So we have all these earnings coming out now. Wonderful earnings. And the earnings are all good, and the companies are all releasing results. There's a few bad ones and a few good ones, which push the markets up and everybody's happy. My concern is if the government's shut down, there's a lot of money that's not getting into the market. There's a lot of money that's not out there, which will probably flood the market at some stage. But there's a lot of things that are not happening at the moment because it's the finances that are shut down. That money is not in the market. So for me, there'll be a lot of companies out there that maybe rely on government contracts and government this and government that, money coming in. And the next time they release results, don't you think those results are just not going to be there? Maybe those results will not be as good. I mean, I know that Tesla relies heavily on government funding. Well, they did. I don't know if they still do. There's a few aircraft corporations. There's a few things going on. There's a lot of businesses that rely on government contracts and work. And that money is not there. And then there's all those government workers that don't have money to spend because they haven't been paid, or I don't know how that works in America. But I see a problem. And I see a problem for the future earnings of companies, because we look at the earnings today, and the earnings look good. So we expect that the next one will also be good because this company is going on that trajectory and everything looks great. But what happens if this government stays shut down for a longer period of time? It already has. And that money doesn't get into the market. I'm questioning that. I don't know. I don't know the answer. I really don't. But I just fear that those companies are not going to achieve the same result at the end. And then also, what's going to happen to inflation? What's going to happen to the inflationary situation surrounding that? And there's a lot of moving parts that come into play when money moves around in countries, you know, when money's shifted around. I don't know if I've discussed this with you guys before, but you don't need a tax system in a country because countries work on import, export, money in, money out, agriculture, growth, things. The taxing is the tariffing basically on other countries and what have you, the money coming in and out. Business that the country does. The money that you have inside a country is a finite amount of money. It's not infinite. You can't just make more. Because if you make more, it just changes the economy. The money that you have is based on the asset value of the country. So that money goes out to the people to spend. I mean, there's no real point on actually taxing them and taking money back or anything to that effect. It shouldn't even work like that. But it does. But it's just another way of doing it. You don't need to do that. And there's proof is in the pudding if you look at Dubai and Monaco and places like that, where they don't have a tax system. They don't need one. Taxing and interest and stuff like that is irrelevant if things are done the right way. So it's interesting. I'm thinking those companies somewhere down the road, those companies are gonna face some pain. They're going to face some difficulty because of money that they didn't earn, money that hasn't come in, that sort of thing. It's an interesting one. John Michael says, answer my question. Let's go back on John Michael's question. Good morning, what firm are you using? John Michael, I use many firms. And here in South Africa, I use firms that are close to my heart. I don't recommend brokerages. I don't recommend firms. I don't put people out there because it will just backfire on me. This account that we're using here to trade with, to show you guys how to trade, this is a funded account. Those links are in the description if you want to play around with those. Those are for more for training purposes than anything else, but if you guys need them because you don't have capital, then they're there. But my actual cash brokerages are here in South Africa. I use more than one, and I have one in the UK as well. But yeah, I don't like to recommend people because it just comes back on me. Just choose someone that's close to you. Choose someone that's close by to you. Choose someone that you can go and have lunch with. Choose someone that's been around for a long time, that's reliable, and you can enjoy it. But further than that, yeah, there you go. Okay, United States dollar, Japanese yen. That looks like it's going in the right direction, so that's great. The moon, you like my chirp, heading to the moon. Yeah, thanks for heading to the moon, yeah. Okay. And where's it not the case? JJ, Canada's going to get into politics larger, where is it not the case? Yeah, look, I think politics all over the world are a little bit, off, a little bit of a problem. It's been tricky all over the place. I don't think we should get into politics anywhere, actually. It's quite insane. The United States dollar, Japanese yen, I actually took a lot earlier on the other account, and it's doing a lot better. But I think it'll still be okay on this one as well. I just thought I'd put it on here for you guys for a bit of fun. And then, yeah, gold was short that with Fani, of course. Dow Jones, big spike. Let's go and have a look at the Dow Jones. There's the S&P 500. Yeah, it's quite a move. It's quite a move. These things are reaching record highs. And it's a form of insanity if you think about it. Even the S&P is reaching record highs. Normally it's driven by the NASDAQ. Oh, that's the UK, sorry. Where are you there? There's the NASDAQ looking the same as the Dow. Pretty similar, which is strange because the tech stocks, But yeah, there's quite a big move here. Look, there's a gap, guys. Gonna want to fill that gap one day. Don't know when, but one day it'll fill that gap. But yeah, the NASDAQ's on the move as well. Everything's on the move. Everything's happy. I think it's got a lot to do with the discussions with Trump and the Chinese guy and Japan and as well, and everyone's happy. The government's shut down, financial side anyway. And there was talk of tariffs the other day, which sent it all flying down. This is the worst case scenario. This is actually the worst case scenario of this situation, because there's a lot of traders in the market at the moment that haven't seen the market go down because they only joined like a year or two ago. So they haven't really seen the market go down. They've only ever seen it go up. And so every time the market leans back a little bit, they buy, and they're just buying, thinking nothing can stop the market. Nothing can change this. This will just keep on going up. And as I've said before, I believe, and I don't predict anything, but I do think that this will probably get to 7,000 because psychologically human beings like to target round numbers. So it'll probably head for the 7,000. When it gets there, will it go further this year? Will it go further in the new year? I'll tell you what. Here's what I think. Because people are just buying, and they don't care what's happening. If nothing happens between now and December, it'll probably just roll up, hit the 7,000, all good. But I think in January, we're going to see a different picture. I think there's going to be a turnaround. I think something's going to change it. Something's going to knock this thing down insanely. We're going to get a decent correction. But I could be wrong. Not to say, I mean, you only trade what you see, and what we see at the moment is a huge move. This gap will probably fill before it goes up. I just get that feeling. But, you know, everyone's just buying, and there's just no way down for this market. And there's a lot of people out there that are making a lot of money from that, feeling very confident about themselves and thinking, Rob doesn't know what he's talking about. I'm just making money. I'm rolling in it. I'm rolling in money. Because every time I buy the S&P, it goes up and it just makes loads of money. But I'll talk to you again. We sure will talk again. There will be a time, because I've seen it all before. Been doing this for 34 years, guys. Come on. I've been doing this a really long time. I've seen it all before. And it's happened to me as well. I've been there thinking the world can't, the world just can't change. The world just keep on going, man. Just keep on buying more and more stock. And then it turns on you. And when it turns on you, funny thing about markets is the wall, what do they call it? When you're trying to go up and it's hard and it takes a long time to go up. The wall of going up it's just so difficult the way it climbs. Okay. And it just it climbs and it climbs and it climbs. But when it comes down like a waterfall. It comes down so fast, and so many people think, what happened? It's dangerous. It is tricky. People haven't seen it. And this is what it builds towards. It builds and it builds and builds. So for a guy like me, so for you who haven't seen it before, for those who haven't seen it before, you're thinking, this is great. This is fantastic. This is a best case scenario because I can just buy and I can just keep on buying. I can just keep on buying. I don't even have to know the charts. I can just keep on buying the S&P, the NASDAQ, the Dow. I can just keep on buying. And but for someone like me who's seen it, I'm very, very cautious, extremely cautious. So when I do this, I trade very carefully. We trade within the strategy. We watch the stop loss. I've actually got to the point now where, I mean, I always tell guys, be careful trading over the weekends, particularly on leveraged accounts. But I got to the point now, because over time I've been taking chances and like, I'll hold it and see how it goes. I'll hold it and hopefully everything will be okay. I've done a lot of that. A lot of you guys have done a lot of that. But I've got to the point now where I'm literally afraid to buy the S&P 500, the Dow, the NASDAQ, the DAX, any of them on a Friday afternoon. I'll be like, I'll wait till Monday morning because I'm not happy to be sitting in these trades over the weekend anymore and taking that chance because I've just got that gut feeling that it's pushed hard. I do think it will push to 7,000 now. I think it's got that ability. And then you've got the Dow and you've got the NASDAQ and all of them pushing up as well. Okay. I read an article the other day before the pullback on gold strategy where Jamie Dimon said gold will reach 4,500 by year end. Do you think it's still the case or did this figure that up? You see, Jamie Dimon said that, and I'm a big fan. I think he knows what he's talking about in most cases. Particularly when he discusses crypto and things like that, you know, you can hear he's got exactly the same sentiment I have on it, even though he sells it in his company as an exchange-traded fund. But I think gold will not reach 4,500 this year, simply because what has happened, and I don't think he expected it either. I see he thinks along the same lines as I do, and interestingly enough, he's far more knowledgeable than I will ever be. But it's just that I've picked up on that. And then his thoughts were probably similar to mine in the sense that we thought, or I thought, he probably thought that the indexes are going to take a hard knock because of the things that were going on, and the tariffs and the issues and the government shutdown and all that kind of thing. It normally, the norm would be that the economy should struggle a bit, or these things should take a bit of a knock. So the money would flow into gold. The money will flow into gold, and that's how it was portrayed. But what's happened now is everything's relaxed and everything's gone normal, and there's a lot of money flow in America at the moment. Everything's going well. There's plenty of money to go around. The tariffs are being sorted out. The only thing that's still a problem is the government shutdown, and nobody seems to care about that. So what that means is then the banks will be like, okay, we don't need to be in the gold anymore. Let's start pulling out of that, putting it back into the normal investments. And that's a bit of a switcheroo thing going on here. So he was pretty close, 4380. He wasn't far off the note. I mean, he was 100 points away from 4.5. So his call was pretty good. But I think it's ended here at 4.4. I think it's done for now. And I think this could, in all likelihood, crash all the way down to 3.3 again, taking all of that away. So I wouldn't be too happy to be sitting long on gold at the moment. Not while the indexes are doing well, because you have to think that the banks are going to start cycling out of the gold and cycling their money back into the indexes. And then you also have to be careful when someone like Jamie Dimon says, oh, gold will go to 4,500 by the end of the year, knowing that he's going to sell all his gold and move it into other assets, okay? So he's got all your money, because what happens now is everybody piles their money in because he said it's a good thing, and then he takes it all out and moves on with it. So, I mean, that's also another way for them to push the markets up, push the markets in their favor, because when they sell their gold, they want to make as much as they possibly can. It makes sense, doesn't it? Because they're dealing in rather large sums of dosh. So be careful of that when these guys say things like that. Don't trust it wholeheartedly, because when these guys make calls like that, they're not retail traders, they're institutional. And institutions are looking to make a huge sum of money. So, and they're going, and any way that they can get their competitors or the other guys to buy when they're selling makes sense for them, okay? And if they're powerful enough to make a statement like that, that will coerce the other guys into buying, then they can sell and they can make a huge profit as well. So watch out for that. That could also be part of the issue. It got pretty close. It got pretty close. But yeah, that's what I think is a possibility on that scenario. It's probably a big possibility as well, not a small possibility, probably a big possibility. Yeah, these things, I tell you what, stuff that we can't even comprehend, because we as retail traders make up such a small part of the market. It's actually insane. And you just have to understand that we can't win them all. We can't. We just cannot win them all. We never will. Nick just mentioned now that Jamie Dimon's JP Morgan has been fined every few years for manipulating the gold market. Yeah, it's very, very true. Yeah, very true. So you see that? Can you call it manipulation? Because it's fair game for him to say, I think gold will hit 4,500. It's fair game. But, I mean, you can't really blame him for that. He's calling it. And then everybody goes, ooh, he said that, and they all buy, and then he sells. It's your fair game. Everyone's fair game. And, yeah, you got to look at it like that. You got to look at it and think, wow. No. Don't take out a second mortgage and short gold now. remember how I said, we can't predict the future. We can only manage the trade. We can only manage the trade. You know, the other thing to remember, guys, is, okay, on this little account here, we call it a $25,000 account. We trade 1%. We're trading very small amounts here. But it doesn't matter on the size of the amount that you're trading. What matters is that you're going to make more in the wins in the long run than you are losing on the lower amounts. So if you want to make more money, you're going to have to play with bigger amounts. In other words, have bigger accounts. So for example, my cash account is much bigger than this, but you risk a lot more. But that said, if you manage the risk the way we manage this, the way I've shown you with the strategy, make more on your wins, lose less on the losses. Then whether you're risking $250, whether you're risking $2,500, whether you're risking $25,000, or whether you're risking $250,000, it doesn't matter as long as you're winning $500,000 somewhere down the line. So the number doesn't matter. So you can make a lot more money in a day, which is why you see so many of these videos out there saying, I made $70,000 today. I made $100,000 today, or I lost $50,000 today. It's because they're just risking higher amounts with a bigger account. That's all. But the amount is irrelevant. If you know that you're working on percentage, you're working on a basis of risk 1%, try and make 2%, then you're kind of on a different footing, on a different platform. And then it takes the fear away. You see, the difficulty with fear is trading with the size of the account. The size of the account. So for example, if you're trading and you're losing $100, it's like, okay, losing $100. But then if you're trading and you're losing $10,000, that's a different feeling, isn't it? Losing $100, okay. If I tell you you're losing $10,000, it's like not so okay. Suddenly that starts to become a bigger issue for you. Now, if you run that in drawdown for a longer period of time, so let's say this $15 was $15,000 and it was ticking like this. I mean, it's not as relaxing, is it? It's suddenly, ooh, that's a rather large sum of money, which is why I get caught out with trades, because I will take a trade, put the stop loss in place, put the take profit in place, and walk away from the trading desk and go downstairs and make coffee and do my thing and talk to people or whatever. Because I cannot sit. I don't have the ability to sit and watch large numbers in red. It affects my psychology, and I don't want to do that. So I leave it, and I walk away and I leave it to its own devices. And then I come back and see what happened, because I know that half the trades will win, and they'll win big. It's easy to do it here because these are smaller amounts, and this is mainly for the channel and everything. And this doesn't worry me that much. It is in the back of my mind. For example, I have this Japanese yen trade and a rather large sum on another account. And now I can see where it's going, but it's in the right direction, so it's okay, you know. But when they go in the wrong direction, like Brent crude oil or, you know, this United States British pound, that, you know, that can affect you. You've got an eye on one side and you're thinking, ooh, what's happening there? So yeah, the amount, you've got to find a balance what you're comfortable with, because you have to sleep at night and you have to sleep over the weekend. That's important too. Those are big issues. Like I've told you guys before, there have been times in my career where I would wake up at 2:30 in the morning just to check a news item in New Zealand or Australia or something, because I was so worried about an Aussie dollar trade or a New Zealand dollar trade, which had gargantuan sums of money in it. Now, I don't know if you've seen those long red, long green lines when they go against you. They're daunting. They can be very daunting in a news event. So I started learning to trade within my means. Don't trade outside of your means. Trade within your means. Trade in a comfort zone where you know no matter what happens, I don't have to wake up in the middle of the night and check what's going on. I'll wake up in the morning and I'll see what happened. So we shall see how it goes with Blue Mango's second mortgage. Maybe you can pay off the first mortgage with the second mortgage, and yeah, something like that. I'm sure that's the plan, to pay off the first mortgage with the second mortgage. And remember what I said to you guys about fear there as well. Very important thing to note and keep in mind is fear also revolves around the amount that you've traded and the amount that you have in your kitty. So if you're a multi-millionaire and you've got millions and millions of dollars in the bank, and you decide, I want to start trading and playing around, you put $100,000 in and you're trading and you're losing $10,000, to you it'll be like $100 to the next person. Okay, you'll be like, it's okay. But if it's your last $100,000, if you don't have all those millions, if the only thing you have in the world is that $100,000, and you go and put it into trading, you put it into the market, and you start losing $10,000, those are the guys that are going to get themselves into trouble. Those are the guys that are going to go now and say, maybe I should dollar cost average. Maybe I should move the stop loss away because I'm $10,000 down. I don't want to lose $10,000. I want that money back. And then it becomes $20,000 and $30,000 and $50,000 and $70,000. Everyone's got their threshold. And then it's $70,000 down. You've only got $30,000 left now, bear in mind. You decide to sell it. Now you've only got $30,000 left to get all that money back. It's going to take forever to get that back, first of all. And then the minute you sell it, it goes back the other way anyway, and you would have got all that money back. It's insane. So there's a different fear level when it's your last amount of money. And then when it's your last amount of money, what are you going to do? You're going to make mistakes. You're going to make all the mistakes that every single trader's made. And there isn't a trader out there that can actually come to me and tell me that they haven't made those mistakes, because they all have. In fact, most of them are still making them now, because they actually tell me in the comments they're making those mistakes. Without saying that, they think they're right, but they're making those mistakes. Nick is perfectly right. He makes a very, very good point here. Holding over the weekend, either have a position size that doesn't bother you, or hedge with options which protect against gap movements. You can hedge your trades as well. For those of you who don't understand hedging, I think I'll do a program on that, or I'll do a live show where I'll incorporate what hedging is. But in short, it's very simple. You hedge one trade against another. It doesn't mean you have to go long and short. What it effectively means is if the market turns, one product may effectively go long and the other one may go short. And if you're long on both of them, then you're just hedging yourself. The problem that I always found with hedging, and we'll go into detail on that when I do that, is when and how do you sell, and what do you sell when? And it's very much a problem that I encountered with futures as well, is, you try and play this game of hedging, okay? And hedging it's a different game. And the problem is, once you sell the one that's in profit, okay, that one reaches target, so you sell it, but you're still sitting with a hedge, which is in a massive loss. Now the psychology is, do I sell the hedge, which is in a massive loss as well? Or do I keep it and hope that it turns around and goes into a profit? And generally with the psychology of it, most people, what they do is they keep it with the hope that it's going to turn around and go into profit. That's the problem, because the hedge is pretty much leaving you on a zero. So it becomes an issue. Hedging becomes an issue. So if you're going to the weekend with your hedge, and Monday morning comes around, and let's say it starts moving in that direction. So let's say it's the US 500 is going long and you've got something that's going short against it. And okay, so it starts moving in your favor on the US 500. So you sell the other one, you dump it, right? You dump the hedge. You know, okay, we're going that way, so we dump the hedge, and then it immediately turns around and goes the other way, and you double loss. Okay, so hedging is quite difficult. Everybody thinks hedging is easy. Once you get into hedging, you'll find that it's actually quite tricky to navigate, and it's actually quite tricky to get your mind around when to sell, when to buy. Okay, so before you jump into hedging, understand it a little bit, but I will go into detail on it sometime. I will go into a story on how it works and how it doesn't work and the best way to go about it. But yeah, it's a complicated thing. Yeah, I will try and incorporate it either in a video or in a live show as well. The futures, Blue Mega asks the difference between futures, CFD options, etc. The one thing you have to understand is everything you're trading on leverage trading is effectively futures. Futures are something that the brokerages all buy, they all get in, and then they offer you a CFD product off of those futures. So, but I'll go into detail on that at some stage and I'll explain it. But actual trading futures and CFDs is a slightly different concept. It's very much predicting the price, etc., in a future time. That's why it's called futures. But I'll go into detail. I used to have a friend who had such a complicated system where he on some of the trades he wouldn't even lose. It was like a no-loss situation. The way he would set the trade up in a little complicated way, that still baffled me, you know. But he did an amazing job of it. But yeah, futures can be a profitable game. But understand that futures are CFDs at the end of the day, just before they become CFDs, let's say. So most of these brokers, what they do is they got futures packages which give you the option to trade the CFDs or whatever the case. And then, you know, options and what have you. So we can go into detail on that sort of stuff at some stage. Yeah, I do need to do that. It's going to be another long story, so we'll do it in training. We'll definitely do that. We'll definitely get into that. But in short, yeah, don't get confused by names, okay? Because, you know, futures were the first thing that was the firstborn, let's say, okay, of leverage trading. It was only futures. And then all these other things started to come along. And it's a result of the brokerages doing that. Because when you're trading on these platforms, you're basically trading with the broker on their futures linked to the exchange, etc., etc. When you trade directly on the exchange, when you buy directly on the exchange as a non-licensed trader, retail trader, it can take an insanely long time for a trade to happen. So, for example, they won't give you a direct link to the stock exchange, direct onto the JSE, Dow, whatever the case, unless you're a broker. So if you're not working through a broker and you are dealing directly with them, then you have to contact them and ask them to sell it, ask them to buy it. I had experiences where it took a day, you know. So this is why the brokers have created these markets for us. Now, yeah, it's all based on futures. Boom, boom, boom. Oh, David, long time no see. Good to see you. Nice to have you here. Nice to have you back. Hanging out. Yeah, I know. Oh, look, the Great British Pound, United States dollar is kind of recovering again and going back to its norm. That said, looks like Brent crude oil is going to do that as well. So I'll tell you what I'm going to do with Brent crude oil. Too many lines on here. That's already broken through. So we all understand Brent crude oil broke its structure, moved against us and moved away. So what I'm going to do is I'm just going to change my trajectory here on Brent crude oil and just see if we're going to get a break to the upside as well, which will be interesting. There's the downside now. If we get a move to the upside on that very, very small set, these little channels that I draw in here, these little trading channels are within the range, okay? And that can be as small as you like. I just want to get an idea of the movement of the price. That's all. So all it does is it tells me that the price is moving that way or it's moving that way. And it gives me a clear signal of which way things are going. Otherwise, you're just guessing. Okay. Which is always an issue with these things. Let's see how Blue Mango's second mortgage is doing here. Not bad. And this is also, I went short with Fani on this one, didn't I? So let's see how our trade goes, Fani. I hope you're on the Telegram. You're on the Telegram, eh? Yeah, so we can chat about it, see how we go. See if we get taken out by stop loss or if we make a gargantuan profit. Make some money off this thing. Ah, there you go. Fantastic. Absolutely brilliant. It does look like it'll eventually go in that direction. And of course, there's the call on today on the US 500, NASDAQ, Dow Jones. And as I said earlier, I do have a feeling, I mean, it's already on 68.81. That's pretty high. Highest it's been, well, it got 68.90 yesterday, but yeah, we're kind of at the highest level the S&P's ever encountered. There is a gap here, but I've got this nasty feeling that it's going to try and get to the 7,000. Traders do that. They're going to push it. And then from there, probably come back down, definitely fill that gap, and then maybe come all the way back down to about the 65. I got a strange nagging feeling there's a good possibility that the market won't end on the 7,000 this year. It might end on maybe 65 or something like that, but we'll see. It will reach the 7,000 before it goes there, though. No, Blue Mango, you have a problem there, because you see, if Fani and myself are wrong, then how can you move in with us? Because the three of us are going to have to move in with Shane. It's the only option. So, you know, because we're all wrong. Yeah. The rest went long. Somebody needs to profit. Yeah. No, yeah, let's be fair. Jamie Dimon called it long. Let's go short. He's looking for everyone to go long. Let's go short. Let's go the other way. Let's see if we can make some money on this. Yeah, no, totally. Since he's calling it long, we'll go short and see if we can make some money out of it. That said, the minute I took the trade, I don't know if you noticed, it's gone red. But yeah, we're in the trade now. Look, it's gone below that support, which is interesting. There's something else. I don't know if you guys have seen it. Don't know if you guys have noticed it, but I'm going to draw in here anyway. Look, this is already broken structure, okay? So I'm going to take these two lines out. We don't need to see that anymore because it's just in the way, all right? So that's gone. But I am going to show you something of great interest now. Some of you will see it, some of you won't. But here you go. Okay? There you go. What we have here. And you can draw them like this, by the way. They don't have to be straight lines. There's a shoulder. There's a huge head. And there's another shoulder. That projects down to about this level down here at 38. Maybe a bit more. Yeah, let's just project that down. No. Projects down to about 36. 3,600. If the head and shoulders plays out. Interesting, eh? There's a huge head and shoulders on gold. Shoulder, head, shoulder. Project the head down. Comes down to about this 36 level. That tells me I'm in for a decent profit all the way down to 3,600. I'm good with that. I can live with that. if the head and shoulders plays out, of course. Yeah. But like I said, charts can't predict the future. It's a wild guess. Always going to be a wild guess. And now it's going against us insanely and going back the other way, but that's okay. Maybe Jamie's buying some gold. I don't know. But yeah, if I look at that head and shoulders, that tells me there's a very strong possibility. Worst case scenario, Fani, we're going to get this coming up and going back for a retest, which, yeah, it could be an issue because it could break our stop loss and go back up to the shoulder, but the shoulder is on our stop loss. So if it goes back up to retest, probably turn there and then come down. But in all likelihood, worst case, it'll retest this level and then go down. But this head and shoulders looks like it will play out. Yes, there was a double top. Okay. Daniel, hey, lovely to see you comment. Yes, the double top, clean double top. There was also, before the double top, a pincer top. I call that a pincer top, where you get the two tails that meld next to each other, and then it comes down. I actually thought at that time that it was going to crash down from there, but it gave a sort of, call it a V-shaped recovery. It gave that whole recovery, went back up, and now it's created pretty much a double top, triple top, and it's fallen from there, okay? But not only has it fallen from there, it's created a lovely head and shoulders. It also broke through structure earlier on. Now it's broken through the head and shoulders structure as well, and it's pointing to the downside. This head and shoulders will be negated if the price gets above the shoulder, but it's got to get above that shoulder for it to be negated. But at the moment, this is in play, and it's in play, and if it's in play, it could go all the way down, like I say, to the 3,600 level. So gold looking sharp, looking good with that. Looking good. That one looks great. And then, of course, the long trade that we took on the Great British Pound, United States dollar, has just been like painful today. But yeah, it was so fine profit this morning. And I thought, no worries, just don't worry about it, as I usually do. And I came back and it was insanely in the red. What on earth? Typical trading. Charts can't predict the future. Charts can't tell you what's going to happen next. My favorite, win rates cannot make you money. I don't know why people think that win rates are going to make them money. If you think that win rates are going to make you money, okay, let me put it to you this way. If you go to a casino and you play a one-arm bandit and you lose 400 trades at $1 per trade, well, 400 pulls at $1 per pull. I'm not talking trading now, am I? Then you've lost $400. And on the 401st pull, you put $1 in, you think, I'm so tired of this, and you pull it, and it hits the jackpot. And you win $1 million. So you've got a 400-to-1 loss rate. You've lost 400 times, and you've won once. And that one time that you won, you made $1 million. Kind of tells me you're in a pretty good profit. I'll think about that. And just think about trading. It works the same way. It works exactly the same way. You play $1, 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 and you lose, you lose, you lose, you lose. And then suddenly you win lots. That's how it works. It's a simple concept. It's not complicated. Like I said to you guys before, it all came to me when I realized that you can't time the market. How are you going to make money in a market that you can't time? I mean, you can't go to a one-arm bandit and pull the lever 400 times. You don't know if you're going to win or not. You got no idea. No idea. It's a full-on chance. Okay? The only way you can play it is with the possibilities that you're going to win more than you're putting in. That's it. It's as simple as that, guys. It's a win rate does not win anything. It just proves the point. No such thing as a win rate making you money, is there? Back on your Prozacs. Don't take Prozacs. They'll, gosh, everyone's short on gold, which is why gold has decided, I'll just make everyone take Prozacs. Okay. Interesting to note that something is not right out there in the world. Warning signs before the shit is the fan. Daniel, you put it, that's what I've been saying all along, Daniel, is something's not quite 100%. It amazes me that the markets keep on going up with the way things are going out there. And whether it is, people just keep on buying. But as I said earlier, I put it down to that simple factor, and that simple factor of the comfort of every time I buy, it just goes up. And all the traders are just buying. Now, you must remember, it's not just retail traders that are new in this market. There's an insane amount of institutional traders out there that are also pretty new to the market. They get involved, not the institutions themselves, but the people working on the floor, because they're given free range to trade with, and they've gone to school and they've learned, and they get on the floor and they start trading with the money. And that's their job, because the other people get promoted. So, yeah, it's always the same. And just buy. And then the people that have been there for a long time also get caught up in this, it just keeps going up, so I'll just keep buying. Just keep buying. And then suddenly, it all turns. But it amazes me that so much is going wrong in the world, and everyone's still buying. Crazy. 100% win rate, percentage probability of losing that trade, better to calculate probability of losing. On your Euro GBP, why didn't you take the trade at the bottom of the channel long? Euro GBP. Why didn't I take the long here at the bottom of the channel? Somewhere down here. There's no reason. I just didn't get involved in it. Didn't see it. Wasn't looking. Traded something else. Missed the trade. There's going to be a lot of trades that you miss like that. I wasn't watching this trade. But yes, if you look at this, right there, I should have taken the trade. Right there. There's a double bottom. It's on the channel, everything. I wasn't watching. Okay, so I get many that I miss. So I know I didn't take it. I didn't take it on any of the accounts, I don't think. And yeah, it happens. It's so difficult to, how can I put it, catch everything, watch everything, be on top of everything. It's just so much going on, that you just tend to miss these things sometimes. Happens quite a lot. The stock market as an inflation hedge against flat currency collapse, Zimbabwe part juice. Yeah. Actually, Nick, I've always used the stock market as an inflation hedge because I live in Africa. Okay, because I live in South Africa. In the last 30 years, South Africa's inflation has gone down the toilet. Our rand value went down the toilet. The country almost went down the toilet. And the only way to hedge against that is to either own a different currency, which a lot of us do, or gold, or whatever the case, or to invest it in property, companies, whatever the case. But we learned very fast, also seeing what happened in Zimbabwe, that holding cash is a bad idea. Because if you have, let's say today we had rands, okay, not dollars, we work in rands. I work in dollars because it's great, because it converts nicely. But anyway, If you have $1 million 30 years ago in South Africa, it was like having $1 million in America today. So equate that. It's a lot of money in America, $1 million. It's nothing to be sneezed at. Now, 30 years ago in South Africa, R1 million was that amount of money. Difference being, if you had $1 million in America 30 years ago, it was still a lot of money. And it was possible to have it. And 30 years later, it's not that much worse. In other words, you've still got $1 million, it's still worth something. So if you had $1 million 30 years ago in America and you got $1 million now, it's not like you're suffering, you're still okay. But in South Africa, you had $1 million rand 30 years ago, you got $1 million now. $1 million can't buy you anything. It's worthless. It's not worth much. So it's it's probably if you equate it, if you had $1 million in 30 years ago, it's probably worth about 70,000 rand now in the same value. Well, that's the difference with inflation on our side. And in Zimbabwe, it would have been even worse. You wouldn't even be able to buy a loaf of bread. So I learned many years ago, put all my money into shares, put all my money into property, put all my money into dollars. Dollar was safe, it was okay, or pounds, euros. Those are the areas where the money goes. And that's what's kept me alive. Because had I just held on to cash, I would have been sorry, wouldn't I? So yeah, that's I would advise that to absolutely anyone in the world. At best, cash, depending on how wealthy you are. Of course, if you don't have a lot of money, these percentages won't be advisable. But if you have larger sums of money, then what I normally say is try to keep 5 to 10% liquid, so that if you need it, depends how much you need to spend, and the rest keep it in assets as much as possible, because assets grow. Assets always grow because they grow with inflation. So if the inflation changes, the asset value changes. So you'll always have that money, even if it doesn't gain actual value, it'll gain inflationary value. So you'll always get that money back, no matter what, if you sell that asset. And of course, shares are the best asset to own, because shares you can sell at the click of a button and you liquid within no time, if you need to be liquid. So shares are one of the best asset values or best assets to hold. But then, of course, you can mix your portfolio, buy property. You can actually these days buy property with investment companies and whatnot as well, just like shares. So you can also liquidate that. Then also rental properties, things like that. And of course, just putting it around the different currencies so that you get some movement around the currencies as well. Yeah, but we weren't supposed to be going into that depth of field, but just so that everybody understands. So yeah, exactly what Nick says. When he says people are using the stock market as an inflation hedge, I've been using the stock market as an inflation hedge all my life, because it's the best inflation hedge you can ever have. Then also, but you have to be careful, because we mentioned Zim here, right? So you don't want to really be invested at that time. You didn't really want to be invested in the Zim stock market either, because that also kind of crashed. So that doesn't help you either. You want to be invested in decent stock markets. You only go long toilet paper when you know you need to go long toilet paper. Japanese figured out the solution to that, though. Yeah. Toilet paper has always been like gold. I actually never understood why people went mad with the toilet paper, but okay. That That was interesting, eh? Everyone went absolutely insane with toilet paper for a while. Buy toilet paper, buy toilet paper, buy toilet paper. It was great. Yeah. So guys, it's been a fun live show. So those of you who did not attend at the beginning of the video, I did do training at the beginning of the video. I did do a little bit of information on the win rate and why win rates are not viable, why win rates won't make you the money, and why win rates won't take you in the direction you want to go. So I did a whole little stint on that right at the beginning of the video. So for those of you who didn't see it, you go back and you watch. It's in the beginning. The first few minutes is me talking rubbish, and then we do a little training session, which we do in every live show. So go there and watch that. That'll be useful to you right at the beginning of the video. I think it's the first few minutes in. For those of you who didn't see it, where I talk about win rates and why win rates don't make you money. Enjoy that. But on that note, guys, I am going to now hit the road and I'm going to be off. We've been on the live show for years and long, well, okay, an hour and a half or two, or maybe 2 hours. Years. But guys, thanks so much for being here. It's been absolutely great having you on the show again. Love chatting to you guys. It's always fun. It's always a nice day. Sorry about last Thursday. I got caught up. My geyser burst and water poured out, and I had to. Actually, I've got 3 geysers in the house, and those are boilers for those of you who don't know what that is, or heater pumps or whatever. Anyway, one of them decided to let go. So there I was, live show or look after the plumbers, and I didn't really want to leave the wife and everyone else looking after the plumbers. So I decided I had to cancel the live show and go and look after that scenario. There was like buckets of water pouring out the second floor, flowing down like a waterfall. That was insane because I got trays underneath, so it didn't come through the roof effectively. It goes out and goes down the side. But yeah, so they had to come in and replace that. Another costly day. But guys, on that note, thank you so much for being here. Thanks for watching with me. Thanks for joining me. I'll see you again this Thursday, if nothing goes wrong, at 1400 GMT +2. We'll have a bit of fun again. We'll talk a little bit about the markets, and we'll have another little session about something that'll be of use to you guys in the markets. Make lots of money, make lots of profit, and enjoy the day. And I'll